we have the current stock market update for AMC Entertainment Holdings Incorporated, stock ticker AMC. Before we begin with today's chart analysis, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, this is the hourly time frame. We're going to be zooming in a bit here to the shorter term time frames in a moment, but I just want to sort of look at the longer term view here so we can sort of get a sense of where we're trading at the moment relative to the bigger picture. So as we can see on this chart, each candle represents a 1 hour trading period, and the current share price is showing lows that are coming in right around $4.85. So mostly this is significant because, this failed to test a prior resistance zone. So in this video, what we're going to be doing is outlining some important price levels, some important support and resistance zones so that traders can hopefully identify some profitable trading strategies for this stock going forward. So as we can see here, as I've mentioned before, the stock itself has managed to see renewed declines here before reaching that $5.11 resistance zone that was being seen previously. Essentially, this is the price high that came in during the September 9 trading session. So as we can see here, this failure to match that level is significant because this recent price high only came in at right around $5.01. So this is significant because, what this really tells us is that we're starting to fail right around that psychological level once again. And we're seeing that, possible short sellers are starting to emerge here because we're not even trading, in relationship to this $5.11 resistance zone that was being seen previously. So we do need to look at some important levels to the downside here. And I do want to sort of zoom into this price chart quickly here. Just so that we can see where things stand at the moment from the 30-minute price chart perspective. So here we have a bit of a closer look here, and we can see how things have actually developed here and how the market is failing to retest these prior levels of resistance. So previously, you have this price zone here, and now this lower high that is being posted in a way that has developed roughly a triple top resistance zone in the process. So here we can see one test, two tests, roughly three tests. You can possibly even call this a quadruple top. And that's significant because what this tells us is that there's now a major price pattern that is starting to form right at that psychological level. In addition to that, we're starting to see share prices move below the exponential moving average cluster. So this does tell us that overall share price momentum is starting to decline in ways that are not supportive for buy on dips strategies. So I just want to move out one last time to the hourly time frame because I want to take a look at the indicator reading on this time frame. This is the 1 hour, the hourly chart, and we can see at the bottom of the price chart this relative strength index reading, which does give us some important signals about where share prices are likely to be heading next. So currently what we can see here is that there was a prior uptrend in share price momentum that has now been broken. So as we can see here, this is a region that has been tested on roughly 3 separate occasions, but now we're starting to see share price movement lose that trend momentum. And what this tells us is that share prices are no longer sort of able to benefit from that upward price movement. In addition to that, what we can see is that there are 2 different ways of looking at the bearish structure that's currently unfolding in this momentum reading. So first, we have this longer term trend momentum line that started to develop toward the end of August. So this is much longer term in nature, and it's fairly stable in its slope. We can see here a shorter term trend line decline here that's much more drastic in its slope. In most cases, you would consider this type of slope to be unsustainable. It's a fairly drastic reading. I mean, you wouldn't really expect share prices to continue to be influenced by something this dramatic, and it is most likely that we will start to see the relative strength index reading move upward and break this negative momentum trend. Of course, we're not there yet, so we can't even really assume that this is going to happen. But more often than not, when you see a trend slope that's this drastic, you start to see a break of that trend line. However, the real problem here is this longer term trend line, because even if we break this short term downtrend, you still have to deal with this negative trend and momentum that has been in place roughly since the end of August. So this is much longer term in nature. And as we can see here, the slope is much more sort of stable. and a bit more reliable. So, it's going to take much more for share prices to actually break through this trend momentum. And this does suggest that overall share prices are likely to be influenced by bearish forces here going forward. So, just to re-summarize here, we need to keep the longer term perspective in mind, but we do need to see a break above this 501 level in order to retarget the prior highs that developed right around $5.11. From there, we're still not out of the water, however, because from there, the next level to watch to the top side is much more important. This level comes in at $5.20. And the reason that this is so important is because this does mark a Fibonacci resistance zone that is based on this prior price decline that was seen previously. So essentially, this is the price decline that occurred from $5.75. If we move up to the 61.8% Fibonacci retracement zone, we can see that this comes in right near $5.20. So from there, if we were able to break above that level, then you can start to open up scope here for the remainder of this price move to then be retraced and for all of these prior stock declines to be recovered. We are seeing some fairly important resistance levels at $5.44 as well. But if we were to break above there, then the main line in the sand becomes this $5.75 triple top that developed toward the end of July. So overall, what we can see here is that there is a long series here of resistance zones that will need to be overcome in order to regenerate or reinvigorate the upside price momentum for this stock. However, if we're not able to break above this $5.01 level, the next level to the downside comes in at $4.62, and then if that breaks, I would expect to see $4.61 retested quite quickly. If we're not able to maintain share prices at that level, we would then be looking at the formation of a head and shoulders pattern, which is quite ominous, and it does suggest much lower share prices are likely in store for this stock. So at the minimum, at that point, what I would be looking at would be a retest of this $4.41 level, which was established during the beginning of August, roughly August 5th. So, there are many different price levels that do need to be watched. And what happens here is that we're being caught in a tighter and tighter trading range that is constricting prices here. In some sense, you could say that price constriction is ultimately what leads to a short squeeze in the positive direction. And there is some truth to that. If you wind up a spring or a coil, that energy does get built up, and the eventual price movement does tend to be quite forceful. However, there is a long series of resistance zones here that will need to be broken in the process, and share prices are going to need to find support here somewhat soon. So here's the current stock market analysis for AMC Entertainment Holdings, stock ticker AMC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.